Hello friends, welcome to GMG accountancy classes. So now we are going to discuss each and every item which is going to become in the income and expenditure account and which is very important for NPO. Now see the items peculiar to not for profit organization means NPO. Distinction between revenue and capital items will be helpful while preparing the final account of not for profit organization. Revenue items will be recorded in income and expenditure account. So only revenue, income and expenditure will be accounted in the income and expenditure account, while capital items will be recorded in the balance sheet. Item peculiar to not-for-profit organization and their accounting treatment in the context is given below. Now each and every item, listen it very carefully and silently so that you can understand the sum, and when you understand the concept then only you can do the sum very easily. Now see the subscription. What do you mean by subscription? Not for profit organization usually collect subscription periodically from their members. This may be collected monthly, quarterly, half-yearly or yearly. So how they collect the subscription? Either monthly, quarterly, half-yearly or yearly. In addition, some special subscriptions, for example, subscription for tennis, billiards, etc., are collected from the concerned members playing tennis or billiards as the case may be. All the subscriptions are revenue receipts. So all these subscriptions are revenue receipts. Next is interest on investment. What do you mean by interest on investment? For investment made, the organization may receive interest. It is a revenue receipt. So this will come under income, revenue receipt. Then sale of old sports materials. The sale proceed of old sports materials like ball, bat, etc. are treated as revenue receipts. Sale of old newspaper. The sale proceed of old newspapers. When you are selling newspaper, whatever income you will get, that is come under revenue receipt. Next item, which is very important also in your textbook, this is the fourth short answer: life membership fees. Life membership fees, amount received towards life membership fees from the members, is a capital receipt as it is not recurring in nature. So this is not a revenue receipt, this is the capital receipt. The sale of old newspaper is revenue receipt, but this is capital receipt. Now one more line you have to add here or write here, that is, it is entered in the liability side of the balance sheet. This life membership fees is entered in the liability side of the balance sheet. Understand? So this is your fourth very short answer. Next, third very short answer is legacy. What do you mean by legacy, or what is legacy? A gift made to a not-for-profit organization by a will is called legacy. It is a capital receipt. One more line you have to write down here. So note it down in your book. It is shown on the liability side of the balance sheet. So legacy will be shown on the liability side of the balance sheet. That is the next point. So legacy means a gift made to a not-for-profit organization by a will is called legacy. So anyone is writing a will and say that all my according to my will, all my property belongs to NPO. So that will come under capital receipt. So this capital receipt will be shown on the liability side of the balance sheet. So third very short answer is over. Next one, admission fees or entrance fees. What is the meaning of admission fees or entrance fees? It is a fees collected from every member only once at the time of his or her admission into the organization. So whenever they are admitted in an organization, they have to give admission or entrance fees. It may be treated as a revenue receipt, as it is a recurring income from new members admitted every year and may be used to meet the expenses at the time of admission. It may also be treated as capital receipt. So, especially it will be treated as a revenue receipt. Sometime it will be also treated as a capital receipt, admission fees or entrance fees. Next one, grants. Grants from governments and other organizations. NPO may receive different forms of grant from government and other organizations. Grant received towards construction of buildings, acquisition of assets, etc. are treated as capital receipts as they are non-recurring in nature. Grant received towards maintenance of assets, payment of salary, etc. are treated as revenue receipts as they are recurring in nature. So, day-to-day expenses will come under revenue receipt and revenue expenditure. Next one, donation. These are the amounts received by NPO, not for profit organization, as a gift. It may be general donation or specific donation. So someone is giving donation to the company. So donation will be two types. One is general donation and one is specific donation. So general donation, if the donation is received without any specific condition, then it is general donation, it is a revenue receipt. So means if simply in the question is given donation or donation received, then you have to write in the income side. But if they mention the particular or specific donation like sports fund, prize fund, etc., you have to use for particular purpose, then it will be not come under income expenditure account. That will become under where it is a capital receipt, so it will come under all the funds. You have to write only in liability side. So see the specific donation. If the donation is received with a specific donation, specific condition for a particular purpose, like donations for sports fund, prize fund, etc. So any fund mentioned, it will come in the liability side. It is known as specific donation. It is a capital receipt. Understand? Next, honorarium. It is the remuneration paid to the person. Honorarium means remuneration. What do you mean by remuneration? Remuneration means salary. The salary paid to a person who is not a regular employee of the organization. It is a revenue expenditure. So, honorarium is an expense. Purchase of sports material is also an expenditure. So, sports materials such as ball, bat, net, etc. are consumable items. Amount of consumed sports materials are taken as revenue expenditure. So this will come under expenditure account if you purchase of bat, ball, etc. And value of unconsumed sports material stock are shown on the asset side of balance sheet, like Sports equipment, if given in the question, then will come on the asset side. Then purchase of sports equipment. See here, sports equipment is given. So purchase of sports equipment. It is a capital expenditure. Example, purchase of table tennis table, purchase of table tennis table, billiards table, etc. So this will come under purchase of sports equipment, capital expenditure. Then purchase of books for library. Books purchased for library is a capital expenditure. Then few examples of capital and revenue items peculiar for NPO are given below. These items you read it carefully because this are going to be asked in the very short answer. If you see here, revenue receipt. In the exam they will ask you have to give 4 or 5 revenue receipt example. So what are the 4 revenue receipt you have to show? Subscription, interest on investments, interest on fixed deposit, sale of sports material, sale of old newspaper, etc. These items if you show, this is your 6th very short answer. And capital receipt, this will come under 5th very short answer. You'll say write any 4 capital receipt or 2 capital receipt. So out of this you can write the starting this 4 or 5 answers, any 5 one. So life membership fees, legacies, specific donation, sale of fixed asset, special fund, tournament fund, prize fund, all will come under capital receipt. This is your 5th very short answer. Likewise, revenue or capital receipt. So all these items will come under revenue or capital receipt. So in this unit, entrance fees or admission fees, donation, special fees and grant from government and other organizations have been treated as revenue receipts, even though this may also be treated as capital receipts. See here, capital expenditure is purchase of sports equipment, purchase of books for library, and revenue expenditure, all these items. Understand? Now what is capital expenditure, what is revenue expenditure, what is revenue receipt, what is capital receipt. Now you can do income and expenditure account very easily. Hello friends, welcome to GMG accountancy classes. Today we are going to discuss about the meaning of income and expenditure account. In this video, we are going to discuss about the meaning of income and expenditure, steps in preparation of income and expenditure account from receipts and payment account, the steps and as well as the format of income and expenditure account. Now first, the meaning of income and expenditure. Also this question has been asked in the first short answer. What is income and expenditure account? So what are the lines you have to write? Now I will mention you and explain you. Income and expenditure account is a summary of income and expenditure of a not-for-profit organization prepared at the end of accounting year. It is prepared to find out the surplus or deficit pertaining to a particular year. So what for we are calculating the income and expenditure account? To find out the surplus or deficit, profit or loss for the business, profit or loss for the NPO. It is a nominal account. Which type of account it is? It is a nominal account in nature, in which items of revenue receipts and revenue expenditure relating to the current year, only current year. Always remember, underline this point or note this point. Only current year alone are recorded into the income and expenditure account. It is prepared following the accrual basis of accounting. So in income expenditure, to find out the surplus or deficit pertaining to a particular year, only current year revenue receipt and expenditure will be recorded. It is just like preparing a profit and loss account. So from here to here, you have to write for the first short answer. Next, in this account, income are shown on the credit side and expenses are shown on the debit side because it is a nominal account. So that is the procedure. Debit all expenses losses, credit all income and gains. Without golden rules, you can't do the account properly. You must remember the golden rules while doing the accounts. So income are shown on the credit side and expenses are shown on the debit side. Apart from cash items, non-cash items such as income accrued but not received, loss or gain on sale of fixed asset, depreciation, etc. will also be recorded. So these items which has been not recorded in the receipts and payment, but it will be recorded here. So all the depreciation, outstanding, accrued income, everything will be recorded in the income and expenditure account. It helps to enable the members to know the working of the organization and to know whether its income it's sufficient to meet the expenses. So whether the income is sufficient to meet its expense, it can be prepared from a given receipts and payment account. Now what are the steps in preparation of income and expenditure account from receipts and payment account? Following steps should be followed while preparing the income and expenditure account. See the first one, opening and closing balance of cash and bank account in receipts and payment account must be excluded. What do you mean by excluded? No need to write. So opening and closing cash and bank balance you should not write in the income and expenditure account. Capital receipt and capital expenditure must be excluded, means don't write capital receipt and capital expenditure. Balance sheet item will not come under income expenditure account. Only revenue receipt and revenue expenditure will be come under income expenditure account. So only revenue receipts pertaining to the current year should be taken to the credit side of the income and expenditure account. Due adjustment should be made for income received in advance, income accrued for the current year, and the amount relating to the previous years or years. So only current year income and expenditure should be taken into the account. Previous year and next year should not be taken into the income and expenditure account. Similarly, revenue expenditure relating to the current year only must be taken in the debit side of income and expenditure account. So must be taken in the debit side of income and expenditure account. Adjustment must be made for outstanding expenses for the previous year and the current year, and for the prepaid expenses of the previous year and current year. Next, any income or expense relating to specific fund must not be taken to income and expenditure account. So fund, if any fund will mention like prize fund or any fund, don't write in the income expenditure account. Non-cash items such as bad debts, depreciation, loss or gain on sale of fixed assets or asset, etc., which are not recorded in the receipts and payment account, must be recorded in the income and expenditure account, which is very important point. These are all items will not come under receipts and payment, but it will be recorded into the income and expenditure account. Seventh step, very important, the balancing figure of income and expenditure account is either surplus or deficit and will be transferred to the capital fund in the balance sheet. If the total of credit side of the income expenditure account is more than the total of debit side excess of income over expenditure, the difference represents surplus. If the total of debit side of income and expenditure account is more than the total of credit side excess of expenditure over income, the difference represent deficit. So deficit. This is the format. If income is more and expenditure is less, then it is a surplus, excess of income over expenditure. If expenditure is more and income is less, then we have to write by deficit. Now, format of income and expenditure account. In the center of your page, take a double page. You have to write the format, name of the club or institution, what is given in the question, income and expenditure account for the year ended, then debit, credit, expenditure, income. Left hand side in the particular columns you have to write expenditure, outer column you have to write rupees. Income, next page particulars column, and right hand side of your page outer column rupees. Expenditure, what are the items will come in the expenditure? Salaries, charities, rent, donation paid, stationery, loss on sale of asset, depreciation, surplus. Where this surplus will come? Excess of income over expenditure. This surplus is the balancing figure, and this surplus will be go to the liability side, add with the capital. This is not given in the textbook, but always you have to remember this surplus you have to add with the capital in the liability side, and this deficit you had to be less from the capital in the liability side. Income item is subscription, donation received, admission fees received, grant received, rent received, interest received, profit on sale of asset, and more two items you write it down: buy locker rent, buy interest on investment. That is also an income. Understand? Thank you for watching the video.